But let's move to another stock which of course has been on fire. This is Escorts. The November sales data for Escorts, however, was a little below what the market was estimating. Credit Suisse, however, has initiated coverage on this stock with an outperform rating. That report says that the tractor cycle will remain strong for the next 2 years. Well, for all these questions, Bharat Madan, CFO Escorts, joins us now. Good morning, Mr. Madan. Thank you very much for joining us. Well, first up, yeah, exactly the point that, I raised. The sales are actually lower, sharply lower than what we saw in both October and in September. What went wrong? Is it one-off?
Yeah, I think this is basically to do with, this is the wholesale number which you're talking about.
Yeah.
So we look at the September, October number, which is essentially the stocking which happened in September for the festive season's retails. The retails were pretty high, and in November also we see the retail actually went up by almost 23%. So what you see is the wholesale number, which is slightly stock correction for the season which was built up in the last 2 months, has been corrected by the industry, but overall the growth remains strong on the ground.
So what should we take as an average monthly run rate? Because there's so much of a difference between the September-October numbers and the November numbers. And as well, this month M&M has done well. So what is your average monthly rate that we can work with?
You had given an indication last time also. I think our annual volumes are likely to be anywhere between 72 to 75,000 numbers. So you can say an average run rate will be about 6,000 tractors a month.
Okay.
And this time, if you look at the YTD numbers for us, and we are growing in line with the industry. The industry has grown for the first 8 months of this year by about 16%, and our growth numbers are more or less in line with the industry. So not much really change on the ground. So I think the demand remains strong on the ground. That's I think the message I will see.
So when you say 72 to 75,000, you're talking about the calendar year 2018?
Yeah, FY18, 17-18.
FY18, all right. Can you also tell us a little bit about, what the margin picture could be? Because that was the big positive factor that we saw in the quarter gone by as well. And now a lot of analysts are forecasting that margins could get into higher double digits. So from 11%, perhaps even 14, 15% anytime soon. Is that a possibility?
Yeah, for tractor business, we expect the margins will continue to remain strong. So what we've seen in the last quarter, which is about 14-15% EBITDA margin, I think that will be maintained. At EBIT level, we had indicated it will be about 150 basis points improvement this year. Over and above, there's some improvement because the GST which has happened because the top line has gone down. So it's a numerator-denominator effect. So overall, I think we can look at 2% plus margin improvement on the tractor business this year.
Okay. Mr. Madan, where are we right now in terms of the tractor cycle? We have had 2 back-to-back good monsoon. So in terms of visibility, do you have fair visibility for next, say, 12 to 18 months?
Yeah, our expectation is, like you said, so the balance of year also we'll see probably a good growth happening in Q4. So we're expecting 15 to 20% sort of growth possibility in Q4 this year. So that will give an overall 13-14% growth to the industry for a full year basis on FY18. In FY19, our guidance is for 8 to 10% growth. Though the first half will remain slightly under pressure because there is no festive season this time. But the second half should make up more than make up for the growth shortfall for the first half. Okay, so overall still be positive.
So year end itself, you're expecting this 12% margins?
Yeah, this year we're expecting it to be about 12% margin for tractors.
And 14 by what? Next year, FY19?
Yeah, we expect FY19 should be the best year in terms of margin. So that should show that sort of number, 13 to 14% range.
Okay. Have you managed to see any gains in terms of market share? Where does it stand at currently?
So this year, so far for the first 8 months, we are almost flat. But normally, if you look at the trend also for the last year, the gains just normally come for us in the second half. So normally Q4, which is a Rabi season for our stronger market, which is a good season for us. So normally we gain market share in that period. So we hope to gain about 0.5% market share this time also. So I think for the full year basis, we should be somewhere around 11 to 11.5%, somewhere in between that range.
Okay. Well, you all sold some treasury shares, didn't you? Some 250 crore. First, are there more such shares that you may sell, and why do you need this money? What are you doing with it?
Yeah, so this was a part of the treasury block that the company was holding. So the funds will flow into the company, and we needed this money for growth because we've been talking about the possible M&A opportunities in the railway space and also some tie-ups in the construction equipment space. So this money will be actually utilized for growth in both these verticals, and we expect, I think, there will be some closer transaction which may happen by end of next quarter.
You have more such shares to sell?
We have more shares, but there is no plan to sell any of those shares as of now in the short to medium term.
Okay. Can you just give us quickly the latest in terms of revenues and margin expectations on your railway segment?
So railway, like you said, our order book remains very strong. We got almost next full year's order book, which is with us now. It's almost 275 odd crores. And the margins also are going to be in 15 to 16% range, which is a pretty decent number compared to historical performance on this business. It's almost highest.
Okay.
All right. Mr. Madan, thanks a lot for your time today. That's Escorts, stock still under a bit of pressure. We have Ashwini back with us, of course, Mitesh Thakkar and Prakash Kaba also.